What is good, ladies and gentlemen? Welcome back to another video. Today I have another technical analysis video for you guys. As you guys can tell by the title, you can see we are going to be talking about inversions with timeframes. Now, the reason why I wanted to talk about this is because everything I teach and everything I have learned over the course of the last about year and a half or so, it's all fractal. So depending on whether it happens on the 1 minute, the 5 minute, the 15 minute, the hourly, the 4 hour, whatever, every single time frame moves the exact same way. So it's important to really understand and grasp these concepts, because if you learn something on the higher time frames, you can also apply it to the lower time frames as well. And that's what I anticipate on teaching you guys today with this video. Before we get into it, if you guys are looking to join the free Discord, link is in the description. And if you guys are looking to up your allocation, code LoeGpa on Lucid Trades. They just dropped these new Lucid Black accounts, so go check those out. They're pretty good. I read the rules, obviously do your own research. But yeah, enough yapping. Let's jump right into the video. So as you guys can see, I have some Picasso drawings for you guys up on the screen right here. Now, I don't want you to really focus on anything yet. The 5, 15 minute, 1 through 5 minute, don't really focus on this. Don't overwhelm yourself. We'll go over everything. But I want you guys to really understand, what is the first thing we do when we jump on the charts every single morning? Well, it's trying to determine where price wants to draw to next. And we can use higher time frame inversions in order to figure that out, right? So what is our bias time frames going to be? Well, it's going to be anywhere from the daily, the 4 hour, the 1 hour, right? If the 4 hour and the daily aren't showing us anything, we can use hourly. If there's nothing on the hourly, we can use the 4 hour, the daily. If there's nothing on the daily, the hourly, we can use the 4 hour, so on and so forth, right? These are our bias timeframes. Okay, what do? Well, they identify where the next possible draw on liquidity is. Now, even though we get a higher time frame inversion with lower time frame confirmation, doesn't mean price has to go towards that next draw on liquidity, right? The market can do whatever the fuck it wants, but it can give us further confirmation. Trading is just a game of probability, so the higher probability trade we have, the more likely it'll play out. Obviously, nothing is 100%, but before every order, right, we need a higher time frame narrative for every single order. Okay, so in this case, right, what do? Well, we leave equal highs, and we actually leave them. Okay, on the way down, we create an unfilled 4 hour that never gets tapped into, and we just continue farther and farther down. Okay, so we have this buy side level right here, we have this unfilled 4 hour, we have equal highs above, but what do we end up doing? Well, we finally come and hit a bullish period. What is this bullish period? A new week opening gap, daily for value gap, be whatever, right? It can be any higher time frame period. It could be an unfilled 4 hour, unfilled hourly, but in this sense, we're going to use this new week opening gap and or daily for value gap. Okay, from there, after we hit that, we're not just going to press long because we see the first 1 minute version out of it. No, we have to use time frame alignment. We can't just go from the daily to the 1 minute. That's just not how it works, right? So what are we going to do? Well, we open up another 4 hour bearish for value gap, but what can we see? We run right through it. So as soon as we run through that next 4 hour bearish for value gap, okay, and we inverse it, we can assume, okay, we just tapped a higher time frame bullish PDRA. We're now starting to disrespect higher time frame bearish PDRAs, and we have clear draws above, right? We have this buy side level, we have this unfilled 4 hour, we have these equal highs. So now we can assume, if we jump down and use our condition and entry point timeframes, and we get confirmation on these, that we can assume price is going to run higher. So hypothetically, let's say we do run through this 4 hour, okay? We can come over here. As you can see, we still have our new week opening gap, our daily 4 hour inversion. Okay, how are we going to use our condition time frame? Well, are we getting confirmation for our next draw on liquidity? And that's really all these 5 and 15 minute time frame is doing for you, right? It's giving us further confirmation for our order. Okay, so are we disrespecting or respecting our conditions? Our condition now, okay, let's say we inverse this 4 hour for value gap, and right here we have market open. Okay, if we're looking to go long at market open, what do we want to see? Well, we want to see manipulation lower, and then a possible rejection out of whatever that area we manipulated into, and then try to target these areas of liquidity above, right? So let's say market does open and it gives us exactly what we want. Okay, we get manipulation lower. What do we manipulate into? Well, we manipulated into a 5 or 15 minute bullish for value gap. Okay, so now that we came and tapped into our condition, we want to see how price reacts off of this. Okay, if we inverse this back to the downside, we can assume, okay, maybe this is just an example of bad price action, or maybe we do have a good draw on liquidity down here, whatever the case may be. But let's say we do, for the sake of this example, we do come down and we respect it. How do we know we respect it? Well, we drop down to our entry timeframes and we get a lower time frame entry model coming out of our condition. Okay, so not only do we have our 4 hour inversion, okay, we also get a retrace into a 5 or 15 minute bullish for value gap, and we respect that 5 or 15 minute bullish for value gap by getting our entry model. And what is our entry model? Well, it's going to be the highest time frame inversion on the 1 through 5 minute. Okay, so if there's no 2, 3, 4, or 5 minute, okay, we're going to enter off the 1 minute. If there's no 4 or 5 minute and there's a 1, 2, and 3 minute, we're going to wait for the 3 minute to close, right? So on and so forth. It's just going to be the highest time frame inversion out of all of these time frames. Okay, we're not worried about the 6 minute, we're not worried about the 7 minute. Okay, we're not going to enter off a 15 minute inversion. If we do get a 15 minute inversion, hypothetically, okay, let's use this as an example, okay, because we can use this to our advantage as well. instead of having a unfilled 4-hour that got inversed, okay, let's say we come down and tap this new week opening gap and this daily for value gap. And instead of having a 4-hour for value gap, we're looking to get inversed, we have a 15-minute, okay? So this, we can use this to our advantage as well, okay? If there's no higher time frame PD array, we already have our higher time frame narrative with this new week opening gap and this daily for value gap. But let's say there's no inversion on the higher time frames and there's no higher time frame for value gap that we're looking to get inversed. Well, the next best thing is we can come and look for a 15-minute inversion for value gap. If we get the 15-minute inversion for value gap, we can look for the exact same thing we just looked for right here, right? Just a retrace into our condition, 5 or 15-minute gap, and then a rejection out of it. Let's say we do get that, right? We get a tap into it and we're getting a rejection out of it. For the sake of this example, we're going to use a 3-minute IFVG, okay? We're going to go ahead, enter off the 3-minute for value gap. Oh shit. Our trade ID is going to look something like this, right? Our entry points right here. Stops are going to be at these lows inside this gap. And then what are we going to go ahead and target? Well, we can go ahead and target key level 1, go ahead and target key level 2 and key level 3, right? As our take profit. And where can we go break even at? Well, just go break even at this internal high that was just created. Okay. So our trade ID would look something like this. Let's say we kind of edge our take profit. We're in drawdown just a little bit, boom, we're now break even. TP1, TP2 just got smacked, and now TP3 just got smacked. And this is what an entire trade idea would look like. So before going into these live examples, I would just want to show you guys just market analysis 101 real quick, okay? So like I said previously, most of the time, I'd say about 95% of the time, we cannot go from like the 4-hour or the 1-hour straight down to our entry time frames. We're most likely going to have to use our conditions as well, because if we make this giant move down, well, we have no internal structure. And on the move down, let's say we don't create a 4-hour or a 1-hour, but chances are on this move down after or before we hit this higher time frame bullish PD array, we're most likely going to create at least a couple 5-minute for value gaps. Maybe there's a 15-minute in there as well, right? But there's going to be some sort of bearish PD arrays on our conditions time frame that are going to be in here. So before we long, we're most likely going to have to inverse those and then wait for a continuation model, which is just a pullback into a 5 or 15-minute gap, and then an entry model like this out of it. However, the only times where it's valid in order to long or short or whatever the case may be to enter off of hitting a 4-hour or 1-hour PD rate and then dropping down straight to the entry time frame is if we have internal structure. Okay, so I'm going to draw up something real quick, and I'm going to show you guys the difference between having internal structure and having no internal structure. Okay, so again, let's just say we have our equal highs, right? We have clear draw above, okay, and we have a unfilled 4-hour resting like right here. Okay, this is going to be an example of having no internal structure. Okay, boom, we create them, we respect this, and then we just make a giant fucking move down right here. Okay, let's say we make this giant move down. Chances are in this move down, we're going to have multiple conditions. Okay, we're going to have maybe 2 5-minute for value gaps. We're going to have maybe a 15-minute for value gap resting in here as well. But chances are there's going to be some sort of bearish conditions somewhere in here. Okay, now if we go ahead and take the first 1 minute we see, and our entry point looks something like this, chances are we're going to get stopped out of this order. Why? Because it's a low probability order. There's no internal structure happening right here whatsoever. Now, let me show you guys an example of where we have internal structure. And this happened the other day live, and I'm going to show you guys this so it makes sense, right? Say we do something like this. Okay, here's our like high right here, whatever. We come down. Here's our unfilled 4-hour. Okay, whatever the case may be, let's just make it visually appealing for you guys. 4-hour, 4-hour. Okay, let's say, for example, we're chopping down and market opens and we're just generating a whole bunch of liquidity right here. See the difference like this? We're generating, no fair value gaps are being created, and then all of a sudden, boom, we come down, hit a higher time frame PD array, and see an immediate V-shaped recovery out of it. See the difference between how we make this giant move down right here and we have no internal structure compared to this, right? We have all this LR built up right here now, right? We have all this low resistance liquidity, okay? We have these equal highs. This looks a lot more appealing than this does right here if we want to take that first inversion after we hit this higher time frame PD rate, right? Because now let's say we come down, we create all this generation of liquidity, right? We have all these stacked highs right here. Boom, we have a clear manipulation leg. This is basically just an AMD model, right? We're just accumulating, but we're accumulating on the way down. Have a clear manipulation leg. We get an inversion. Boom. This trade looks a lot more clean than this previous one I drew up prior, right? Because now what do we have? Well, now we have internal structure that we can go ahead and target and use as a valid break-even point as well. Okay, and we still have those equal highs resting above. And I'm going to show you guys that live example first so you guys can really understand what I'm talking about. And then we can go ahead and just go into a random day and we can do our bias and everything together. So jumping to example number one, this day literally looks exactly like the drawing I just drew up. So this is a perfect example, right? What do we get? Well, we get a tap into this 15-minute gap right here. I marked open, 2-minute inversion, longs fail, right? We don't end up taking out this draw on liquidity. What do we leave? We left relatively equal highs. Nice draw on liquidity, right? We have clear draw on liquidity. However, what do we end up seeing? Well, we end up seeing price ends up shitting the bed. Okay, what do we shit the bed into? Just came down, shit the bed, swept out these 1 hour intermediate lows, also swept out these 4 hour intermediate lows. What else did we come down into? What's on the 15-minute? Okay, we just came and filled this unfilled 15-minute gap perfectly, right? From here, would longs be good? Well, probably not. Why? Because this is a violent move down. What do we possibly create on the move down? Probably unfilled for value gaps, okay? So what do we have on the 5-minute? We have an unfilled 5-minute right here. We have a unfilled 5-minute right here. What else do we have? Going to the 15-minute, we have an unfilled 15-minute fair value gap right here. Okay, so if I want to take longs, I'm going to be looking for one of two things. Okay, if I want to catch that pre-distribution long, I'm going to be looking for internal structure, so maybe a resweep of this low, whatever the case may be, or I'm going to be looking for price to run through these gaps, pull back, and then we can take longs, something like this, right? One of those two scenarios. But here's an example, right? We come down, hit the 15-minute, and what do? We instantly get a 1-minute inversion. Okay, here's our 1-minute inversion. Let's just mark it in a different color, right? We have this for 5-minute, this 5-minute, this 15-minute. Okay, what do we get? Nope, not quite. Where's this 1 minute? Boom. Okay, awesome. We get this 1-minute inversion for value gap. Now, why is this going to fail? I would say about 90% of the time, right? Our stops are probably going to be somewhere down here. Our TP is probably going to be the entry point to this 5-minute, whatever the case may be, okay? Why is this most likely going to fail? Well, we have no internal structure, right? We just created this giant fucking move down, and not only that, but we're also inside of this bearish 5-minute gap as well. Okay, so this trade idea looks like complete dog shit. What ends up happening? Boom, we're inside the 5-minute, edge the other 5-minute, and then we end up reversing down, stopping you out, okay? But after we get stopped out, what ends up getting created now? Okay, we have this minor accumulation zone. We just ran through this first 5-minute. I don't believe we ended up inversing it, okay? But now what do we have? Now we have this internal high that we can use as a possible break-even point, okay? So what do we get? We get a resweep of this low, and with the resweep of this low, what else do we also get? We get a SMT at those lows as well, okay? So as you can see, we're kind of accumulating, generating orders, boom. Nice manipulation move down, creates a 1-minute for value gap. We also get a SMT at this low right here, giving us further confirmation. Here's our SMT. What's our very next candle do? Immediate inversion. See how this inversion looks a lot more cleaner than this one that took a billion candles to inverse? Awesome. I'm taking this long 10 out of 10 times. Where's my long order at? Here it is. Stops are going at the lows. Where's my TP going to? Okay, my TP is going towards this internal high and this unfilled 5-minute right here as well. Okay, what ends up getting created with this internal high? Now we have an unfilled 15-minute for value gap, okay, with this internal high as well. So it adds another draw on liquidity for price to go to. Now in this sense, we're probably not going to hold towards these equal highs up here just because we have all these bearish for value gaps stopping us, right? Kind of acting like as a blockade. If we did want to target these, we'd probably look for just a continuation model, right? Wait for these to get inverse. But since we can use these unfilled gaps as take profit areas as well, boom, we can go ahead, enter off this inversion, and our trade idea will look something like this, right? We can go ahead, target this first 15-minute, the 5-minute, let's see how the trade idea plays out, boom, and it runs straight to TP a lot cleaner than what this one did right here. So I have an example right here for example number 2. Now that we went over our market analysis, let's get into our actual example, right? What do we end up getting? We end up getting a liquidity sweep on the higher time frame. Okay, market opens somewhere in this candle right here, right? 6 a.m. candle, still functioning, okay? Market almost somewhere there. What happens prior to market open? Well, you can see we end up inversing this 4-hour bullish for value gap right here, indicating, okay, we're probably going to go lower. Along with that, what do we end up creating? We end up creating a 4-hour bearish fair value gap as well. So now that I'm seeing, okay, cool, we just inverse a 4-hour gap. We don't really have any unfilled gaps down here that price probably wants to go to and push off of. Where's our next draw on liquidity? Well, it's probably going to be these 4-hour lows. What's at these 4-hour lows? There's also a unfilled 4-hour right beneath those 4-hour lows. So this is a good draw on liquidity somewhere in here as well. So if I see this, right, if I see a 4-hour inversion and then a 4-hour bearish value gap open up prior to market open, right, let's move this to like 9 o'clock ish, somewhere in here. What am I going to want to see? I'm going to want to see price push up into this bearish for 4-hour and then continue lower, right? If I'm leaning bearish and coming into the morning, I want to see 930 manipulate higher, and if I'm leaning bullish coming into market open, I want to see price manipulate lower, and then we can try to catch that PDI model, right? So not only do we get a tap into this 4-hour, what else is also created? There's also a 1-hour bearish gap right here as well with intermediate highs in it. So I'm like, cool. Coming into the morning, I want to see those intermediate highs get swept out, a possible SMT created off of them. We don't get the SMT, which is perfectly fine, but ES also comes inside of these, or this unfilled hourly as well. Pause, ES coming, what? And what do we end up getting? Well, we have 1-hour intermediate lows right here. So after we come and tap out this, oh my God, I just fucking blanked out. After we come and tapped out these 1-hour intermediate highs right here, awesome. Now what are we looking for? Now we're looking for our entry model, right? We have everything we need. We have our higher time frame narrative with the 4-hour inversion. Then we got a 4-hour for value gap tap. We have a 1-hour for value gap resweep of those internal highs. Okay, now what am I looking for? I'm looking for any 15 minutes to possibly get inverted for a continuation model. Don't really see that. Now I'm looking for our entry model on the lower time frames, right? Do we get a 5-minute inversion anywhere? What do we see? We see this 5-minute finally gets inversed, but this probably isn't the best inversion to go off of because it took a million candles to get inverted off of, right? So we get further confirmation with our 5-minute inversion. Okay, what else do we also create? After that 5-minute inversion, we create a 5-minute bearish for value gap right here. Now that this bearish for value gap got created, I'm looking to see a rejection out of it. So now we can scale down lower. What ends up getting created? Nothing in here. There was a 30-second in here. I don't have the 30-second on here, but I do remember this day. Okay, the 30-second closed somewhere about right here. Your stops can go at the top of this wick. And where can your TP be? Well, your TP can be at the bottom of this crazy ass wick right here, or even all the way down where it ended up flooding to, right? All the way down here, somewhere like this. If you want to hold for the rest of the day and have a 1 to 14 RR, that would be beautiful. Or you can just go ahead and take profits, maybe these lows right here, maybe this low, wherever you want, right? But the higher time frame narrative is probably going to push lower towards these significant draws. Now, I don't know what this ended up doing. I don't know if it ended up continuing farther and farther down. And that is exactly why you don't want to hold all the way down here. You probably would just want to take profits right here. But the general idea of this trade was, okay, we are going to go short because we had that 4-hour inversion. Then we tapped the 4-hour for value gap, tapped the 1-hour for value gap. Okay, got a 5-minute IFVG, a 5-minute for value gap tap, and then a 30-second inversion out of that 5-minute. So this next example, I'm going to use the hourly. As you can see right here, right, we had this big ass move down. Okay, big ass move down. We end up inversing it with this candle right here. Awesome. But that's way prior to market open. Okay. We were trying to look at stuff in the general area of market open. Okay. What is happening prior to market open? Well, we now create this 1-hour bearish gap as well. Okay. So now I'm waiting for this bearish gap to get inversed. What ends up happening? Okay. Right here with this 9 o'clock candle, we end up inversing this 1-hour gap. Awesome. That's my condition. Now I'm looking for a continuation model, whether it's on the hourly, whether it's on the 15-minute, whatever the case may be. Okay. So now that we got our 1-hour inversion with our higher time frame narrative, right, we're clearly bullish. Okay, we have a clear draw higher with this, right? There's another high resting right above it right here that we can go ahead and target as well. Maybe even an unfilled hourly right here that I'm looking at. I see a devil's mark on the hourly right here, but I'm not too worried about the devil's mark, right? We already have clear draws right here. So now I'm going to be looking for bullish sentiment, right? Because now we're disrespecting bearish PD rays on the hourly. Now I want to see bullish PD rays getting respected on the lower time frames, okay? What ends up happening? Cool. We end up coming down and tapping into this 15-minute bullish value gap right here. But as you can see, we have a 15-minute gap right here as well that is bearish, right? And it has yet to be inverse. So ideally, we want to see price inverse this gap, pull back for another continuation, and look something like this, right? But we don't always get what we want, so I don't even know what ends up happening right here. Let's look at it together. What ends up happening? Not really inverse yet. Boom. Okay, this 15-minute gap now gets inverse. What am I looking for now? Either a tap into a now bullish 15-minute for value gap or a bullish 5-minute for value gap. We end up getting a bullish 15-minute created right here. Now let's go down. Let's see if there's any 5 minutes as well. I see a 5-minute also inside of this 15-minute. So now I'm waiting for something to look like this, a retrace into here, and a rejection out of it. Okay. I also see a 5-minute right here as well, but ideally we want to see this 15-minute get hit at minimum. Okay, so let's go. What does the next candle do? Looks like we're just gonna rip higher and higher and higher. Okay, we do get a pullback. Not really the best price action, and then we end up hitting take profit. So this would be an example of we probably wouldn't get an entry due to the fact that price is delivering slower to the draw. However, it ends up delivering regardless, right? We ended up getting a tap into this hourly fair value gap that got created. Okay, don't really know if there's an entry out of there. It doesn't really look like it, right? We kind of hit that hourly, kind of just chopped around a little bit, and then we did end up delivering to that draw, but with no entry point that we can find that was valid, at least, right? So with that being said, I just want you guys to, again, to take away a few things, right? We're using that daily, the 4 hour and the 1 hour as our bias time frames, the 15-minute and the 5-minute as our conditions, and then our entry time frames is going to be anywhere on the highest time frame inversion through the 1 through 5 minute. Okay, I really want you guys to drill that in your head. That's going to wrap up this video. I hope you guys took something away from this. If you guys have any questions, comments, concerns, go ahead and leave them in the comments. Like I said, links are in the description for the free Discord to up your allocation with the code. And yeah, with that being said, that should wrap up this video. Hope you guys enjoyed, and I'll catch y'all in the next one.